All right, now I'm getting pretty excited here. Not that I wasn't excited about the first couple of videos, but this is where we kind of get into the meat and potatoes of things. We've established all the terminology. You know how things function when I say the box or the bid or the ask or the spread. You know what all that stuff means now. Now we need to really start to build on things and get to what we need to do as traders, and that is manage risk. And the first step in managing risk is just establishing the context of risk. So that's exactly what we're going to cover here in this video. If you ask any trader, hey, what's the secret recipe? What's the holy grail? What's your secret sauce to your long-term success as a trader? They're going to say risk management. If you don't manage risk, you're not going to have any success. Randomness leads you nowhere. Luck can happen, but how do you think casinos survive? They survive off of knowing that nobody is going to continually take money from them. There's going to be people that walk out and beat them, yes, but on a consistent basis, no. Why is that the case? Well, I believe that's a roulette wheel. I don't gamble, but I think that's what that is. There's nothing you can do to manage risk there. There are no professional roulette players from my understanding, and there's a reason for that, because it's all randomness. With trading, it is not randomness, because you can learn how to manage risk, and that's why that's why you're watching this course right now, to manage risk. So if you're planning on being in the trading scene for the long term, then you need to learn how to do this. You need to learn how to limit risk management, mitigate risk, all those things. It's all about risk, because when you manage risk, the long term is going to be in your favor. That's where most traders fail. They always look at the numbers, how much can I make, but they never look at, how much could I potentially lose, or how much am I going to lose if things don't go my way. Nobody wants to think about losing. That's just human nature, human emotion, but it's just not realistic. You need to accept the fact that as a trader, you are going to lose, but with that in mind, we need to learn how to put ourselves in the best, most probable situations. Level 2s are obviously an excellent tool to do exactly that. So there's two things we're going to talk about. We're going to talk about support and resistance and logical risk. Now, if you're a chart player, you have heard support and resistance before. Then we're also going to talk about some logical risk. And like I said, just going to start to build the context of risk. And that way, as we continue to go forward through the course, everything is going to just continue to compound on one another, and you're going to have a good firm foundation of what level 2s are all about and what they're not all about. All right, so I want to ask you a question. Growing up, why do you look both ways before crossing the street? Why are you taught to look both ways before you cross the street? If you answered to exercise your neck, I'm sorry, you're wrong. That's not why. Well, I guess you could do that, but that's not your primary reason of looking both ways. Wow, that was a bad joke. When I typed that up, I was thinking, oh, this is going to be funny. But now that I say it, that was a pretty bad joke, so I apologize. You do it because you want to reduce the risk that you get hurt. After looking both ways, you come to the conclusion, and it's a very logical one, that, all right, your risk of getting hurt are highly unlikely. Yes, a magical school bus could appear out of thin air and hit you. A rock could fall from the sky. A plane could fall out of the sky and hurt you. But come on, what are the odds of that happening? So that is a logical risk. You are looking both ways because you don't want to get run over by a car. If you don't see any cars, or if the light's red and you have the it's okay to walk sign that's flashing at you, you have a very good logical risk of not getting hurt. Yes, somebody could run a red light, or in the case if there are no cars, something could fall out of the sky and hit you. But we as humans, we take logical risks all day long. I think that's probably the most relatable one. Just looking both ways before you cross. But logical risk, this concept needs to be applied to our trading. We don't want to get hit by a car. We don't want to, do something stupid. Yeah, sure, sometimes a magical school bus is going to fall on us, or something like that. Someone's going to run a red light and hit us. But in the long term, over the long haul, if we're taking logical risks and just being smart about things, the pros are highly going to outweigh, those things that, just happen every once in a while. So that's what I want to establish here is trading is all about logical risk. Is it logical for you to make this trade? Remember, when you're putting money on the line, you are putting it at risk because you may not get it back, or you may not get as much of it back. So that is a risk. You are risking your money, but we're not at the casino risk where you have no control over it. We have control, so that's what level 2s are going to be about, helping us form and take logical risks. So I've been talking about, hey, level 2s are great at monitoring and helping to take logical risk. So what are these indicators of whether or not to take risk? Well, support and resistance, as you've already heard the term, and as I've already alluded to, for you chartists out there, the people that use charts, these terms are familiar, but there's also, they apply to level 2s too, and that's pretty much what everything revolves around. It all comes down to finding, monitoring, and then measuring these two areas, supports and resistance. That's what it comes down to, just like charts. That's what it comes down to in level 2 is you want to find areas where there is support and resistance. If you've never heard these terms before, don't worry, we're going to cover those here in the next few slides, but that's what that's the nucleus of level 2s is support and resistances. And for you that do use charts, hopefully now you're saying, okay, so I can start to see now how these things might jive together. If support and resistance is very important in charts, and now Clay's sitting here telling me that support and resistance is very important in level 2s, then it's really starting to hopefully you're seeing how they can complement each other. But that's the key level here, is just where the resistance is at, where the support's at, and then that's where we can start to build on top of, okay, maybe this is a logical risk to go, either long and, make a position, or just stay away from the trade and, hold off for a little bit longer. Now support, this is the bulls. This is where the bulls hang out. This is bullish. This is long. I'm just trying to think about all the terms that imply, positive. This is where people feel good about the stock. It's just I guess this probably picture sums it up the best. This is where the bulls are hanging out. So it can all be summed up though in this equation. Support equals bullish equals buyers equals demand equals the bid. So again, support is bullish. That's where the buyers are hanging out. That is where there's demand. So for you economic folk out there, the basics of economics are just supply and demand. So and with support, that is where the demand are, because people want them. And when people want something, they're willing to buy. And then that is, as you know now, the bid on level 2s. Support shows you the people who are bullish on the stock and therefore want to buy it. However, they are only partially motivated, so they are sitting on the bid. This statement should make total sense to you right now, as we've really talked about the difference between just being interested, being partially motivated, and then being super motivated where you're willing to pay it whatever. So the support is showing us where the psychological feeling for the stock is, where people are bullish. So just kind of starting to think about things, if you can kind of tell where people are maybe feeling bullish, maybe that's a good area to try to buy at. So that's kind of where we're headed in all this. Now on the other side of the coin, we have resistance. And again, this term can be summed up using this equation. Resistance equals bearish. So, you out there, the bulls versus the bears. The bears are, where people aren't feeling so good about something. So when people aren't feeling so good about something, they become sellers. And that is where, going back to our economic people, that is where the supply is. And then that is our level 2 terminology, which the ask. So again, resistance, people are bearish on the stock, therefore they're sellers. And that's where the supply is, and that's the ask. So like the other one, resistance is just going to show you the people who are bearish on the stock and therefore want to sell it. However, they're only partially motivated, so they are sitting on the ask. So that's the more term right there. If somebody says, I'm sitting on the ask, that just means that they want to sell, but they want to be up on stage. They're not willing to sell it to the people in the crowd. They want to stay up on stage because they're just partially motivated, but they are bearish, but they're just partially bearish. If you're totally bearish and you just want to get rid of the thing, then that's where you're gonna bid whack or something like that and just sell it to the people out in the crowd. But resistances, so it supports. We were saying okay, this is where people are feeling good about the stock, they want to buy. So maybe that's a good reason, or maybe that would be a good area to buy. The opposite is true here. If people are feeling kind of not so good about the stock and people are wanting to sell the stock, and people people just aren't feeling so good, is that necessarily a good place to be buying where a lot of people are not feeling so good? Maybe, but it's one of those things where that doesn't sound too logical. Buying at an area where people aren't feeling so good about the stock. So just keep all that stuff in mind. Doesn't really make sense, and it doesn't really make sense to buy where other people are really feeling bearish and not so good about the stock. So just by avoiding that, you're already starting to tilt things in your favor in terms of risk. So as I've kind of been hinting, I hope we can now all agree that, at this point, gaining an idea of where the bullish and bearish areas for a stock are, where the supply is, where the demand is a pretty useful piece of information. Knowing where the partially motivated people are from each side, putting them back on our psychological hats, playing our psychologist here. I think that's pretty good, and it gives us a solid context of the sentiment towards a stock. It's one of those things where how are people feeling? And as I've started to allude to with the game theory, you can start to base things off, okay, if the majority of people are feeling like this, then they may act like this, which means I should act like that to benefit me. So that's, context here, knowing support and resistance, very, very important. But of course, I'm talking about all this great stuff, but you're thinking, okay, that's great, Clay. Thanks for, telling me all this stuff now. But where do I find the where? Well, there's 3 layers of context, and that's what we're going to get into now. So we're going to find out where they are, but then within the where, there are 3 layers of context. That probably sounds kind of confusing, but as we go through the presentation, it'll start to add up and make sense to you. If you've never heard the saying, you're going to hear it right now. Context is king, whether this is in literature or anything. It's all about the context. What is the overall thing? If you look at something isolated, you're not getting the overall picture, and that's just not good, especially when it comes to trading. And but level 2s, that's why it's a great tool, because it's going to help us give us overall context of the entire trade. So like I said, there's going to be 3 layers that we can look at, and these are going to help us establish the mood of a stock. So there's going to be the size of the box, the size of the shares, and then representative reputation, so the reputation. Now, with the Holy Grail, there's no such thing, but learning to use these things can tell us when to cross the street. So unless you want to become, a road pizza and get run over by a bus, these are the things that are going to tell us when you're probably not going to become a road pizza. Sure, you're still going to get hit. All traders get hit once in a while, and that's just part of the game. There's no such thing as a perfect trader, but let's try to at least limit the amount of times we get hit. And when we do get hit, let's make sure we're getting hit by, a little 3-year-old on a tricycle rather than some, huge bus. So that's what we want to do here. We want to get hit by little girls on tricycles, not big, massive buses. Or that we don't want to get run over by Abram tanks. That's even better. We want to get hit by bicycles, not Abram tanks. So the first layer here is going to be the size of the box. You know what the box is. If I say, the bid box, you're going to know that I'm talking about the market makers on the left side of the level 2. If I say, the seller box or the ask box or the people up on stage, you know that I'm talking about the right side of level 2s. Those are the people wanting to sell. So the size of the box, the amount or just the size of representatives, so the amount of representatives at a particular location can be an indicator of where support and resistance reside. I mean, I think that's pretty logical. The more MMs at a certain price level, the more logic there is that that's probably a level of support or resistance. Now, keep this in mind. I'm not speaking in terms of guarantees. There is no such thing as a guarantee. We're going through all this in just terms of reasonable logic. Like I said, I think hopefully you're saying, oh, I can't believe I paid for that. That seems pretty obvious. The more MMs at a certain level, that's probably a good area of where people want to either buy or sell. So hopefully that's very reasonable logic, but that's what I want to stay with because as we'll see going forward, this logic is not a guarantee because there's more layers to it than just this. But this is the perfect starting point. Now this is one of those things where colored boxes are so important. I think all level 2 providers have them, but make sure that if like I said, I'm pretty sure they do, but it makes visualizing just very efficient and very streamlined. You can see it quick. Okay, that's the size of the box there. There's the size of the box over there, and it's just much easier looking at colors. Like I said, I believe that's universal for everybody, but if yours are just black and white or something bizarre like that, you're gonna need some colors in there, and you'll see why. But like I said, it shouldn't be a problem, but definitely something worth noting. So let's look at an example here. Here is a level 2, and the trader talk would be on the ask side. There's a wall at 154. Why is that? Well, let's look at the size of this box. You see this color, this dark yellow. A lot of market makers sitting right here at 154.40. So you could say, wow, the box over here on the ask, that's pretty big. Or like I said, in lingo, trader talk, you'd say, wow, there's a wall at 154.40. So if you've ever been on the message boards or whatever, and you've seen, wall at this price level, that's what they're talking about. They're saying there's a big box on a certain side of, the level 2s. Over here, you'd say, okay, there's the size of the box right here at 154.38. You can see a bunch of market makers lined up here, so you can see clearly, and this color, not the best. I would never use these colors. This is from Lightspeed, who is my broker, and they have different formats. So I would never choose this format for colors because it's not that easy to see. I use one where the colors are bright and different, so it's much easier to see. But the point being here, just looking at the prices, you can see that, okay, a lot of people, a lot of market makers hanging out at 154.40. So that would, again, reasonable logic. Okay, it seems like there's a lot of people that want to sell at 154.40. Over here, you can see only one at 154.39, so I would not call that a big box, and I wouldn't say that 154.39 is much of a support because there's only one market maker sitting there. However, down at 138, you can see much more people. So now you're looking at and saying, okay, it looks like 140.30 or 154.38 is probably more where the buyers want to be, and 140.54.40 is where people are feeling more bearish on the stock. So that's what I'm talking about in terms of size of the box. Figure out what price level a bunch of market makers are at, and then you can use that. And in terms of looking for walls on the ask, and then bid support, which is the trader talk on the bid. If someone were to say, oh, there's massive bid support at 154.38, they're just talking about there's a big box at 154.38, known as bid support. A lot of support here, but there's only one market maker support. Look at it like this. If you have like a pep rally or something, or a demonstration where you want to go and protest or whatever, support for that particular initiative is going to be based off the number of people are there. Is there much support for this initiative up here at 154.39? No, there's one market maker sitting there. Is there a lot more support for a certain initiative at 154.38? Yeah, look at all the people that showed up at this level. So people must feel more strongly about the initiative at 154.38 than they do at 154.39, because only one person showed up for that pep rally, but a lot more people showed up for the pep rally at 154.38. All right, we're going to start to go through some examples here. I'm just going to pause, or I'm going to give you a second to pause the video, and then I want you to just start to look and identify where you think supports and resistance are going to be, and then I'll come on and give my thoughts, and you can see how it matches up. If you get it wrong, no big deal at all, but I just want you to start to get to recognize where supports and where resistances are, where people are feeling bearish, where people are feeling bullish, where's the supply, where's the demand. So take a look here and pause it, and when you come back, I'll be ready to talk. All right, so here, if you said, you know what, over on the bid side, I think it's pretty evident, because again, this is where the colors really do a good job. Look at all this yellow right here. 4 market makers hanging out here at 50 cents. A lot of people seem to be wanting to buy at 50. Over on the ask, well, this is actually trader talk. This would be a pretty thin ask, meaning, okay, there's one market maker hanging out at 50.5 cents. There's one at 50, one at 51, and then 52, but yet there's 4 over here at 50. So if you said, it looks like 50 cents is a support, but I'm not real sure where the resistance would be, that's a good answer. I mean, if anything, you could call 52 the resistance, but I still wouldn't call that much of a resistance at all, just because there's still only 2 market makers there. So the proper answer would be 50 cents would definitely be the bid support, where the support is for the level 2s. On the ask side, resistance, if you said, I'm not real sure, I don't know, that's probably the right answer, because if you were forced to choose, you'd have to choose 52, just because there's 2 right here. But on top of that, I mean, there's nothing that really sticks out. So just an example here of the colors, how that makes it very easy to see, and just how, okay, a bunch of market makers are hanging out here. A lot of people showed up for the pep rally at 50 cents, so there must be some pretty strong belief over here. On the ask, it doesn't seem too bearish at this point in time. All right, again, check out and try to find some supports and resistances, but look at the level 2s, and I'll pause it and be back. All right, so on this one, if you're looking over here and said, oh, okay, looking at colors, first thing just shows the goofiness of level 2. Sometimes you can see the bid and ask is 26.23. That happens sometimes, but in the next slides we'll get to what the true bid and ask is there. But for now, if you were saying, all right, on the support side, it's looking like I would have to say 26.22. Good job. You can see right here 3 market makers hanging out right there. And then over on the ask, where would resistance potentially be? Well, again, it's nothing as clear as the bid side, but if you were forced to guess, if you said 23 or 26.24 right here, that would be logical. You can see 2 market makers sitting there. But again, this looks like a pretty thin stock. Not many people lined up at any certain levels. But again, 26.22 on the bid, support, 26.24 over here, based off of the 2 market makers. So not, like I said, wouldn't call any of these obvious, but just quickly looking at the colors, looking at the price levels, okay, potential support here at 26.22, resistance 26.24. Okay, take a look at this one and try to find some supports and resistance. All right, if you're looking at this one thinking, oh, this one's tough, there's not much to see. Well, there you go. There's your answer. This is there's just nothing. It's hard to gauge risk on this one because we don't have any. There's no clear levels. There's no solid green. It's showing us a bunch of at one price level or no solid anything else. Just a tough one to look at when you're just trying to use the size of the box. So sometimes that's how it's going to be. That's why I like this example. There's just not much you can tell from it. Based off the size of the box. So, hopefully you didn't spend too much time trying to figure it out. But the answer here was really, there is no answer because it's just, there's nothing here in terms of resort. There's nothing here on when we're looking at this first layer of context that's showing us anything in terms of the size of the box. So now looking at this one, take a look at it and find some possible supports and resistances. All right, if you thought, all right, on the support side, it's looking like, this one's kind of tough. There's quite a few at 30. Look at all these market makers here. There's quite a few actually at 29. Oh man, there's quite a few at 28. And then on the ask, thinking, okay, there's quite a few over here at 31, so that could be resistance. 32 has a few different market makers more than 31, so maybe that's the support or resistance. So this is kind of the opposite side of the token, meaning there's just so many market makers out there that it's kind of a little bit confusing, and you can't necessarily tell. Well, where's support, where's resistance? Well, level 2 isn't really telling you much in terms of that because there's just a lot. All it's telling you is, okay, there's a lot of market makers, there's a lot of players in the game. So knowing that, I'm guessing it would be a highly liquid stock. And yes, this is actually Cisco, and Cisco does all sorts of volume. Already over 33 million here. But point being, just looking for the size of the box. Not really telling much just because, both sides have a lot of market makers. So again, just kind of a limiting function and why there's always more layers of context than just one. But size of the box, nothing too transparent here, or nothing too straightforward, I should say. Okay, for our next one here, take a look and then I'll be back. All right, let's start with the bid. If you said, you know what, it looks like 55.70 is where the true support is. Great job. Look at this. And again, colors make things so much easier to see. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. So 6 market makers hanging out down here at 55.70. I mean, some decent support here. I mean, you have 3 at 72, 3 at 71. I would not call 74 or 73 any sort of support, but just one at each of those levels. But it seems like support's more in the low 55.70s, but an exact level based off the size of the boxes, I would say looks like to be right around 55.70 down here. In terms of resistance levels, pretty difficult. Maybe the 55.80 area. You have 2 here, have 2 at 79. So just one of those things where, all right, it's not telling us too much, but you could also draw the conclusion, okay, it seems like people are pretty bullish on the stock here because you have all the support and it seems pretty thin on the ask. Not many market makers over there in terms of the size, and that would be that's a logical conclusion. So again, if you said 55.70 seems like the support, that would be the kind of A+ answer. But you could call some of these other areas kind of minor areas of support too. Resistance wise, not really showing us too much over there. All right, take a look at this one and then we'll talk. So if you said, all right, on the bid side, maybe 0009, but to me right here, I mean 0008 seems to be where that the true level of support is. 1, 2, 3, 4, 5. Only 3 at 0009 and then 2 at 001. Resistance, although nothing really sticks out. This one seems to have quite a bit of resistance. I mean, you have 3 up here at 0011, 3 at 0012, and then 3 at 0013. So quite a bit of sellers here on the ask in terms of bid sizes. But again, just to harp on the color thing, isn't that easy to see? Just okay, 3 orange, 3 green, 3 gray. I mean, right now it's fine because we're just learning. But when you're out there, actually, you got to be able to make these decisions, not in like split seconds, but you got to be able to just recognize things and pulling this up real quick. Okay, it just a lot of gray right there. What's all this gray about? Okay, 0008. All right, and then it just your mind really starts to function. So you know, and I'm not saying again that you need to be able to recognize all this stuff in, you know, a millisecond, but you know, the colors really do just make things so much easier, and just quickly figuring out where's the size of the box on both sides of the level too. So we've got that layer of context out of the way, the size of the box. Let's now incorporate another layer of context, and that's going to be the size of the shares. So the amount of shares that the MMs are attempting to buy or sell for their clients at a particular price can be an indicator of where support and resistance are. Again, I'm going to say that again. You don't need to necessarily write it down because I'm pretty much just reading it off, but the size of the share, so the amount of shares that MMs are attempting to sell or buy for their client at a particular price, can be an indicator of where support and resistance reside. Now, as we discovered, as nice as it would be, MMs are not required to show the true size, but in the event they do, it's definitely worth taking note of. This is the least important layer for penny stocks. It's important, but it's you know, just shooting straight, it's the least important because as we discussed in the previous video, it's not most MMs use their default sizes, so they're not going to be able to show you anything unless an ECN shows up. But it's still worth understanding. So you know, but penny stock traders, you know, we have a different way of measuring share size, and that's going to come more later. We've talked about that a little bit in regards to the tape and how, you know, nobody can hide from the tape. So that's going to be, you know, a little bit different way how we focus on things. But as far as, you know, maybe you're watching this and you plan on doing big boards, then this one is super important. This is probably the most important thing for trading big boards with level 2s, because level 2s on big boards are pretty much all ECNs. And although they can still hide size and stuff like that, there's going to be examples here, as you'll see, where sometimes they don't hide size, and you just see a massive order just sitting there, and you're thinking, huh, that's kind of interesting in terms of support and resistance. So penny stocks, you know, this isn't so important just because of the default size, but if you're a big board trader, then this is definitely, you know, an important thing to keep in mind when you're trying to, you know, measure the overall context of risk. So let's now start to build on top of the example. So back to the one that doesn't have the best color scheme. So we already know the sizes of the box and where potential resistances and supports are in regard to that layer of context. But now looking at the, you know, the size of the shares, well, at 139, the box is very strong. Not many people showed up to this pep rally, and on top of that, they only want 5 shares. So yeah, that's not a very strong showing for that pep rally at 154.39, especially when you compare that pep rally is going up against this pep rally where 1, 2, 3, 4, 5, 6, 7, 8, 9, where 10 people showed up, and amongst those 10 people, they want to sell a total of 377 shares. So 377 versus 5 shares. I would say that 154 has now become even more of a logical area of resistance, because when we've combined these two, there's a lot of people there, and there's a lot of shares there compared to the amount of people that showed up at 154.39 and the amount of shares that they want to buy at 154.39. Here is, like I said, this is a penny stock quote where things just become a bummer. You know, in our perfect little market, it was sure nice to know how many grandma wanted to buy, or how many you know, River Van Trader, or how many Billy Bob was trying to sell, or, you know, how many Slick Willie was trying to buy or sell. But here you can just see default size 5,000, 5,000, 5,000, and then you have 2,500, 2,500, 2,500. So you could think, all right, from the share size perspective, support really is gaining because people want 5,000 here and then 2,500 over here. But as we've talked about, that's still, you just never know. I mean, you don't know because nobody's telling you how many shares are actually out there. So there's going to be other neat ways to figure that out, you know, especially with the tape. But here you can just see, now, example here, ARCA ECN, so he has 2,800. So ARCA usually gives you a little bit more accurate price, but, you know, and you have 500 here, but, you know, they're at $1.01. So there's just no, you know, rhyme or reason. Again, over here you can see actually ARCA 8,000, so they have to show more of the true size since you know, he is an ECN, but for the most part, just really can't tell much. You know, 5,000 and 2,500s, yeah, you could say, all right, 5,000 is better than that. So, you know, support is looking like it's even more over here at 50, and I would agree with that, partially just because the other side of the partial would be, well, it's a penny stock, and you know, they're not showing us true size over here, so 2,500 really doesn't mean that much. So now looking back here at this goofy one, actually pause it again. Now start to build the layers. You know, we have the layer of, and I'm sorry, I should have done that on the previous one, but take the first layer we have, a size of the box, and now start to kind of try to combine that with the size of shares and see if you can, come to, possible supports and resistances. So I'll give you a second to pause and do that. All right, so coming back here, if you're thinking, I would still say that 2622 looks like a solid area of support, especially now when I consider that between these three people that are there, this one wants, over 9,000, 6,600. Those are some pretty big share lots there, and I would agree. So 2622 really becomes even more of a, I would say pretty important, pretty substantial area of support where you can logically say, okay, a risk around 2622, that would make sense because there seems to be quite a bit of people there that want to buy. In terms of resistances, again, it does a good job of showing, okay, before we weren't quite sure about 2624 because there was only two people there, but look at the size of those two people there. Not quite as much as over here, but still between those two market makers, they're trying to sell quite a few shares. So now 2624 making more sense in terms of, okay, yeah, this one actually kind of looks like more of the level of support or resistance. Sure, there's only two people there, but between those two people, they have to sell quite a bit. And this is, of course, is a big board level 2 quote, so it shows that for big board traders, we really can benefit from seeing the share size because it makes things more clear. Whereas in the previous example, I'm just kind of sitting here twiddling my thumb saying, yeah, this is 5,000, yeah, that's 2,500, but that's kind of all I have. Well, that's the one big difference between penny stock level 2s and big board. But regardless, the concept here is still the same, and you have to understand, even if you never plan to trade a big board in your life, the concept here and the mental exercise that we're going through is still very crucial. All right, now take a look at this one and try to figure out, combine the size of the box now with the size of the shares, and I'll give you a second. Okay, now hopefully the picture is starting to become a little bit clearer. Maybe you're thinking, okay, maybe you can't see that, but right here is 3,900 or 3,905 with a K, which means add another 1,000. So yes, there's only one market maker here at 0.018, but that is one massive order right there. And this is one where they're showing a little bit more share size. Now, whether or not that's true, like I said, for penny stock trading, usually this isn't the case, but sometimes you are going to have some share size out there. So it's worth taking note of, and that's why it's worth understanding this principle, because once in a while you're going to come across level 2s where you actually do get some share size. But this is one massive order right here. And then, over here there's just the standard 5,000. Over here on the bid, now when you're looking, oh man, it looked kind of neutral at first, but now it's seeming, big obvious resistance here at 0.018. Maybe some support there at 0.0165, but compared to this massive over here, a little bit doesn't make as much sense. So again, this level 2 is still limited. It's not as limited as it was before. Now that we understand, share size is another context of the establishing risk, but buying up here at 0.018 when you have somebody or a group or more people, because UBSS could be representing multiple clients, but that's a big order sitting there. So I don't know if it's necessarily a logical risk to try to be buying up here at 0.018. There's really no clear-cut areas where to be buying over here on the bid side either, or price levels. But for where we are right now in establishing the context, that's kind of where things sit. Okay, same thing here. Now I'll apply the 2 layers, and I'll give you a second. Okay, so hopefully the picture became a little bit clear here. Just quickly looking at this, I would say the resistance is at 2631. The support is at 2629 or 2629. Why do I say that? Well, let's just first start with the resistance. A lot of market makers up here first off, so the box is pretty big, and then look right there, 133. That's a pretty darn big order. So 2631, I would consider the level of resistance combining these two things. I say 2629 on the support side. Why do I say that? Well, first, a lot of market makers, granted these ones are probably hiding orders. I mean, just showing one. Pretty sure JP Morgan and Bank of America would be buying more than. Anyways, I'm getting ahead of myself. But regardless, down here there's a big old order at 210. So that's even though these are you're counting them as size of the box, but which can show you, side of the box can also be a little misleading because maybe they don't necessarily have a lot of shares that they want to buy there. But anyways, size of the box and then that big order, that's what's leading me to say, all right, it's looking like 26.29 is more of the true level of support, and 26.31 is the true level of resistance. Getting through this 26.31, then looking, the size of the box here is big, but is it really that big? I mean, only 1, 7, 10. I mean, there's not any big orders over here. So I would think, okay, with a break of 26.31, maybe this thing could really start to get moving. Once again, getting ahead of myself, but sometimes I just can't help it. All right, now take a look at this one. Combine the two layers, and we'll come back and talk. All right, this one, maybe you saw this, but to me, the big level of resistance here is at 55.74. Why do I say that? Well, at first, you couldn't say anything because there's only one market maker there, so I wouldn't call that a gigantic box. However, 55 right there, that's a big number, 55. And then you look over here, 1, 20, 1, 9. So I mean, if you were to add, let's see if I could do mental math here real quick. So let's see, 20, that's 30, 39, 40, 41, 42, 43. So adding all these up right here is still not as much as this one market maker has right here at 55.75. So now down here at 55.70, remember beforehand I was thinking, well, you could possibly consider 55.72 and 71 as supports because there's still 3 and 3 here. No, that's all disappeared now that we've added this new layer in. Yes, it was logical because there are a lot of people here, but their share size not that much. However, now you look at 55.70 and boy, oh boy, that becomes a lot more logical. Not only do they have a lot of people hanging there, there's somebody with a 50 share order, 10, so it adds up a lot bit more. And okay, it looks like 55 is really the true level of support here. Things become more clear. Things become more clear over here. Real quick, where would another looks like area of resistance be? You said 55.79, good job. Why would you say that? Well, sure, there's only 2 market makers here, so it's not like that's massive size. But again, there's another one of those 50 share orders sitting there. But as far as support and resistance goes, doesn't make much sense to buy at 55.75 when it seems like the true level of support over here is more so around the 55.70 area. Okay, again, take a look, and we'll be back to talk. All right, this one is pretty much worthless. 5,000's everywhere. So share size, penny stock, just not telling us anything at all for this one. So just an example of, like you saw, sometimes they'll show you size, but in this case, just nothing. 5,000 all over the place. So, nothing can be told here from share size perspective. Okay, now let's add another layer of context. Hopefully you saw through that last one. Okay, wow, that's nice. I mean, that one market maker was there, but then, when you consider the share size that they have, 55, okay, that makes it more sense. And then when you add up those 55 compared to all those other people on the bid, he still outnumbered them. So now that we have the couple layers, things are starting to become clear. Now they're going to become even more clear as we talk about the representative reputation. Market makers have reputations, not because of, who they are, but because of who they're, I'm getting ahead of myself. So let's first just start off with this is where I kind of get passionate because this is things are getting interesting. This is the fun stuff here. But let me ask you this: so how do you feel when you are driving and then all of a sudden there's a police officer behind you? I don't know about you, but for me, all of a sudden I get a nervous feeling. Why is this? Because a police officer has the power, the reputation to do a lot of things to me. However, do I pull over to the side of the road just because there is a police officer there? No, but I'm definitely not going to speed up. So because of the reputation, a police officer can throw me in jail. He can arrest me. He can make me lose money by writing me a ticket. I mean, a police officer has a lot of power over me. That's his reputation. That's why when all of a sudden I see one, I get nervous. And I should be nervous because, okay, I'm in the vicinity of somebody that has a reputation to do a lot of harm. Now, of course, if you're a police officer, you have a ability to a lot of good, obviously, but I'm just thinking about, we're all paranoid about, am I driving? Did I use my blinker when I changed lanes? I mean, all that stuff. So I'm not trying to bash police officer, just using it as an example of when you're driving and I see one in my rear view mirror, all of a sudden I get the little butterfly in my stomach, get a little nervous, and that's because of the reputation. And I'm definitely not going to do anything stupid, but I'm not going to panic and pull over to the side of the road either, because nothing necessarily is wrong. They may just be, driving behind me. So, okay, Clay, you've been rambling enough. What is your point? Certain MMs have reputations, and while these reputations should be noted, they need to remain innocent until proven guilty. So just because you see somebody, you got to, okay, innocent, unless you prove guilty. And that's what we're going to go here is we're going to teach you how to judge, but that's going to come later on, and not too much later on. I've actually already kind of hinted at it in our previous example, but we're going to show you how to judge, or not where, I'm going to show you how to judge and how to, kind of dictate, should I just, do I need to get out, or is this MM living up to their reputation, or are they just kind of being pretty neutral? So MM reputations, what are some of these reputations? Well, there's kind of two key ones. There's really just one key one, but then people twist it and turn it to all sorts of other things. But in the world of penny stocks, the one reputation that MMs can develop, and rightfully so, I'm not denying that, is in regards to dilution, where they just sell shares. Now, some MMs work mainly with CEOs and or the third-party financiers. And third-party financiers, those are people that have gotten shares at vast discounts because they've taken a risk with either in the form of a loan, a promissory note, that's a debt convertible. I'm not going to get into all that. That has nothing to do with the course. Just understand that some MMs, I don't know if they give them massive discounts, give them good deals. I don't know how that works. Doesn't really matter. Point being, they like to do business with CEOs and third-party financiers. They're not all, it's not like that all the time, but, every time, we just got a bottom line, and look at that, right down there on the bottom line. I wish I could say that was on purpose. But bottom line, all this needs to be remembered, innocent until proven guilty. I mean, you don't want to jump to a conclusion just because you see a MM with a certain reputation. But, we do need to understand that, some of these MMs, like I said, whether it's because they give them good discounts, maybe they're easy to work with. I don't know what it is, but a lot of these MMs just seem to work with the companies that want to dilute and sell shares, or those third-party kind of loan shark financiers that have a bunch of shares that they need to sell that were given to them as part of some complicated, agreement where now they have a ton of shares that they don't really care about what price they sell them at because they got them at such a vast discount. Now, let's talk about some big board stuff. What kind of reputations do big board MMs have? Well, this comes in just regardless or in terms of a brand reputation. So, at the time of this recording, Goldman Sachs is I would say is the king of the mountain. I mean, just Goldman Sachs, they're the top dog. But is that always going to be the case? No. Can you remember firms called Bear Stearns and Lehman Brothers? If you're on the younger side, maybe you have no idea what I'm talking about when I say that. Well, yeah, they used to be market makers and all that good stuff, but they are now buy. So that goes back to the point in the previous videos where I'm saying MMs, they're always changing because some people go out of business. These are Bear Stearns and Lehman Brothers, two massive investment banks that, went bye. So market makers are always changing, but they do, and they had they had good brand or two. So, if you saw them on level twos, but Goldman Sachs right now, king of the mountains, and big board reputations can really give an inside look at what a good swing trade level may be. Not necessarily some quick little day trade, but if you're looking for a swing trade, this is where a brand reputation can give you a hint. Now, it's not the only thing. You should never just buy based on that, but like I said, it's helping to kind of tilt the context of risk in our favor. And penny stock or big board reputations are always changing. That's just has nothing to do with stocks either. That has to do with you at your job, you with your family, you with your friends. Reputation, what people think of you, are always changing depending on, who you decide to do business with, how you decide to conduct yourself. You get the point. Now, the one thing with this, because like I just noted, reputations are always changing, is that if you want to be a good trader, especially in Pennyland, you need to keep an eye on who is who in regards to reputations. You don't have to panic. This is not hard to do, but it does require some effort and pre-planning on your part. So let's just get the pre-planning out of the way right now, and it starts after you finish this course. Just keep in mind as you go about your daily routines that as you read through message boards, social media, and this is definitely geared towards penny stock people, but as you read through the message boards, chat rooms, all that stuff, just keep an eye out for who is being labeled as a known diluter. You'll see that all the time. Oh, this such and such they're a known diluter, or they're a diluting MM, or all that stuff. When you see certain MMs being labeled as that, remember those 4 letters. Just write it down. And then as you go about your normal trading, watch these MMs and just watch how they're acting. Does it fit the criteria of a diluter? Now you're saying, what is it? What is the criteria of a diluter? Well, we'll cover that. But with experience, soon you won't even need to be reading anything. I mean, you're not going to need message boards because you're just going to be able to recognize it from a mile away. I mean, for me, it's not hard at all to recognize a MM that I've never seen before and say, yeah, they're diluting. I mean, it's really not rocket science, and you're going to see why it's not rocket science when we go through some more scenarios. But for now, just getting started, just see out there, who is saying they're diluters. And most people that are saying they're diluters, well, I shouldn't say that. I mean, sometimes people are blaming Knight. I talked about Knight. Knight gets blamed all the time for dilution. They're not a diluter, and I'll back up that claim easily as we go through. And if they are, again, it's very easy to spot a diluter. It is by no means rocket science. But for now, the pre-planning, just start to keep your eye out there because reputations are always changing. Brands are always changing. The market makers, those 4 letters, they're always changing. I mean, they're just changing. Am I annoying you yet with how many times I've repeated myself? But I really want to get that across is you got to keep on top of things until you get to the point where you can just look at level 2s and be like, okay, I've never seen that market maker before, but they're definitely diluting, and that's the goal of the course. And like I said, does it take some practice? Yes, it takes some effort on your part. Got to watch level 2s, but once you get the kind of how they move and what you want to look for, it's really not that difficult to see. So just my disclaimer again, if you're watching this 15 years from now, these MMs may not be around. If they still are, then wow, good for them. They've been doing a good job. So let's just talk about the diluting MMs, and these are again the CEOs and third-party financiers: VFin, Vert, VNDM. Yeah, there's probably some other ones, but these 3 seem to be the most commonplace in terms of the MMs that are more than likely diluting. Again, just because they pull up in your rearview mirror, does that mean you have to freak out and pull over to the side of the road? Take your hands out of the car or get out of the car and put your hands on the hood and say, "Search me, officer." No, you don't have to freak out. But yeah, when you see those MMs show up, it's time to get out your little gavel and start the judging phase. And then there's retail MMs, and that's just you and I. Knight, UBSS, SBSH, E-Trade, GSCO. That's always a good one to keep in mind for you big board traders because that is Goldman Sachs. And like I said at the time of this recording, they are the king of the mountain, and they have been king of the mountain for quite a while. But that's always an interesting one to keep in mind from their side of things. And just don't forget about the pre-planning. I'm not going to cover that anymore. They change, so just keep that warning in mind. Okay, now in the previous layer, it was, all right, penny stocks pretty worthless. Well, big boards, for the most part, pretty worthless. Here you can see just both sides, blah, nothing over there. Just a bunch of ECNs, don't see anything that sticks out. Over here, blah, nothing that really sticks out. But we do have, within the 3 layers, there's 2 that, really told us where the resistance is. So although, reputations aren't telling us anything, by using the size of the box and then the size of the share, we have a very good idea here of where support, where resistance is. So, but nothing here in terms of, hey, yeah, this is obvious. No, nothing there when it comes to the reputation side of things. Okay, so just take a look at this, see, if you see any reputations out there, and then we'll cover that. All right, so let's see, and I'm kind of doing this off the cuff. HGSN, maybe, but they're on the bid, so they're buying anyways. There's VFin, so there's the evil VFin. However, why is VFin? Why is this nothing to worry about? Here's a little question here. Why is VFin nothing to worry about in terms of this scenario? Bad reputation VFin, but what? Because they're on the bid. And who's hanging out on the bid? The bulls. And what are bulls looking to do? Buy. And why are they looking to buy? Because they're bullish. And there's demand. So nothing there to panic about in terms of VFin because he is on the bid. And he is actually up on the best bid. Let's see. Retail. See, at this point, ETMM, that was E-Trade, but now they're ETRD. So this is an example of same company, just different ticker symbol, or not ticker symbol, but I don't even know what that's called, just representation symbol. Knight, just retail. Over on the Ask, PERT, potentially. Actually, I'm pretty sure PERT is diluting here, but we'll cover that in future videos. HGSN, possibly, but again, we'll cover it in a few videos. Highly doubt they're diluting. Then retail, VFin, there's the evil one, but he's way up at 55. So, you know, nothing really here in terms of reputations to be concerned about, I would say. Well, based off reputations, yeah, there's something here, but we're not ready to cover that yet. But as far as, you know, the, VFins, where's the other ones at? Oh, yeah, VNDM, dollar, nothing to worry. And there's Vert right there, dollar. So nothing to worry about. I don't see Goldman Sachs anywhere over here. Oh, that's odd. Goldman Sachs not buying a penny stock, huh? All right, again, take a look, and we will be back. All right, do you see it? Dun, dun, dun. Look at that. Goldman Sachs hanging out down there at 26.11. He's only showing 100 shares, but come on. It's Goldman Sachs. They don't show up and just buy, you know, the bare minimum. There's a much bigger order down there, and he's at 26.11. So, again, that's much lower than where it is. You know, is this the level of support just because Goldman Sachs there? No, that's not what I'm saying. But it's something to take note of. Okay, that's interesting. Goldman Sachs sitting there at 26.11. So maybe if I'm a swing trader and if it can get down there around the 26.10 area, you know, maybe that might make a little good swing trade. There's many other factors that need to go into it. But, you know, just within the context and with the confines of this video and what we're talking about here for the mental exercise, you know, it's worth taking note of. But as far as, you know, near-term levels of support and resistance, we've established that already up there at 26.22 and 26.24. And then over on the ask, also have to consider, okay, you know, if the price were to ever get up to 26.37, you know, how many is Goldman looking to possibly sell there? It's one of those things where the price isn't up there. There's plenty of room where you could, you know, do a quick day trade or a 10 cent move here. But something, you know, to keep in mind, you know, okay, Goldman Sachs, oh, that might be a good little area of support. See how Goldman Sachs acts down there, but might be a little area of resistance over here based on Goldman Sachs. So, you know, always keep your eye out as the big board trader for, you know, just little things like that. Okay, looking here, now maybe, sorry, getting ahead of myself. Pause the video and take a look. All right, so hopefully, VNDM, didn't you say they have a known diluting? Yep, well, there they are sitting right at the top ask. So are they diluting? I don't know. Actually, I do know, but I'm not going to reveal that secret yet because I don't want to get ahead of myself. But could they be diluting? Yes. Should you take note of it? Yes, because of that reputation. So now all of a sudden it becomes, all right, we may have a very potential resistance here between 0.0175 and 0.018. Why 0.018? Well, remember, there's just from a share size perspective, there's that massive order sitting in there right there. So now this picture becomes pretty clear. Remember when we were looking at the size of the box, this level 2 is just like, wow, there's nothing you can tell from it based on the size of the boxes. But that's why there's always more layers to the context than just looking at some isolated thing. We need more context. So that's why, perfect example here of, you know, just looking at one little thing of context doesn't show you the whole picture. But now I'm very confident in saying that, you know, this little area here from 0.0175 to 0.018, I would expect to be pretty heavy resistance. Over here on the bid, you know, retail. So just some retail traders in there. But, you know, this one is looking much more bear friendly than it is bull friendly, I would say, at this point in time. All right, take a look at this one. All right, coming back here. If you said, that's pretty worthless, I would agree. Nothing here in terms of reputations that stick out to me. So, but a big board one, of course. Other areas here where they had the advantage over penny stocks, you know, with the size orders that we already talked about. Yeah, that was nice. But as far as reputations, no, not really offering any assistance in terms of supports and resistances. All right, let's take a look at this one. Okay, coming back. Do you see anything that would make it worth anything? I'm not seeing anything. I just running down here the reputations. All right, right there. So, and this, okay, perfect example. Maybe you saw that and I just noticed it right now. But remember how we said, all right, now it really looks like 55.70 is the support. This is pure speculation on my part, but people aren't stupid. Look what Goldman Sachs just happens to fall at. 55.69. Look where this whole big bid all of a sudden just formed. Right in front of them. So this is they're pulling a Slick Willie move. Look at all these people are pulling a Slick Willie move. They're cutting in front of line because, again, speculation, but it's not irrational. It's not like it's you know, talking about aliens or stuff like that. I mean, this makes logical sense when you consider that you know, market maker representation carries some weight. These people see Goldman Sachs bidding at 55.69. Slick Willie time. Let's jump in line. And it wasn't the only person thinking that. Big bid here at 55.70. And is that why this formed here? No, but is it is it a logical thought? Yeah. So now 55.70 looks like even that much more of an attractive support. Because think about it, if you buy at 55.70 and then the price still keeps going down, you got Goldman Sachs right here that's sitting right behind you. So yeah. Just one of those kind of interesting foods for thought. Maybe that's why this 55.70 had something to do with forming here. Again, total speculation. I don't know that for sure. Level 2s aren't going to tell you that, as we've discussed. But hey, it's just pretty interesting. One of those things where level 2s, shows you a good little chunk of the market and what may be going on. But point being, 55.70, this one seems like a pretty darn straightforward area of support. All right, take a look at this one, and then we will talk. Coming back, let's just go through here. Let's see. I give you time, but really for me, it's like a split second where I just stop talking. So it's not like I've paused it into and I'm figuring out what I want to say. I'm just doing this kind of off the cuff here. But looking on the ask, retail. Oh, so we got some potential there. Retail, PERT maybe. But nothing here that, well, there's a couple that needs to be noted, but again, guilt or innocent until proven guilty. And then on the bid, retail. So some potential people there that you want to pay attention to, mainly Verd on this one. Let's see if VFin even over here. All right, VFin's, yeah, but he's way up at 0.03. Where's VNDM? VNDM way up here at 0042. So a couple Vert, you'd want to keep an eye on that, but does that automatically mean that 0012 is resistance? Maybe. It's much more helpful than in terms of, remember, let's go back to the first layer. We thought, all right, well, looks like this one's got quite a few resistances, but 3 here, 3 here, 3 here. What's really the right level of resistance? Well, and then of course the share size was totally worthless on this one. That didn't tell us anything, but reputation might be telling us something. Maybe if I was forced to guess now, I would say, well, I'm placing my guess that 0012 is a level of resistance based on reputation alone. Still got to treat it as innocent. Maybe none of these really are resistances, but when you look here between the three, at least now we have, by getting to that third layer of context, a reason, and it's a logical reason why you would say, all right, right now I'm thinking 0012 is a level of resistance, and we can also add more layers to it as we go through the course. But for now, it's at least we can start to narrow things down over here in terms of resistances. And now finally, what I want to end with, if you've taken my other courses, you've seen this picture here, but like I said, I minored in economics, and economics uses just a lot of charts to sum up overall ideas. So I just want to talk about this, so you'll see this more in the course. But within these layers of context, the more ideals that we have in our favor in this regard, the more things that we can use to determine. So if we can, for example, if we can use the size of the box, the share size, and then the reputation, then that, actually, let's go back. I want to show one real quick. This will make more sense. This one right here, we have all sorts of ideals in our favor. We have first the size of the box. We have then the next layer, we have the next ideal, big share order. And then the third ideal, meaning what happened, with reputation, we have Goldman Sachs sitting down here. So on all three levels, we have ideals that we can use. So 55.70, that's going to push us way along the x-axis here on the chart. So keep this in mind, all three things, all firing on all cylinders, lots of clues here. So all ideals in our favor is going to push us quite a bit of ways down this line, because as the number of things in our favor, the more things we can use, the further down this line is going to be. So let's just say we are right here. We need to go up. Oh, that was a bad straight line. Connect right here. And then where does this put us on this line over here? Up here. Probability of success. So remember, what are we measuring here? The ideals. That 55.70 was a level of support. Now, I'm still using the word probability. Keep in mind that word does not say guarantee, but probability of success, I mean, all those three things over there, I would definitely buy at 55.70. Maybe even 55.71 to try to pull a slick willy and jump in front of all those other people. But I like the probabilities of success, that if the price goes down there, that's a level of support, and there's going to be a lot of people that are feeling bullish about it, and there's going to be some sort of bounce back upwards from there. That's just based off of knowing all the layers of context, which for that one we had a lot in our favor. Now, if there's one where there's not quite as many things in your favor, maybe you're right here, still up here, it's not like you have a terrible thing, but your success isn't going to be as big as it was or your chance of success was not going to be as big as when you had more data points, more things to go by. Let's say you pull up a level 2 and there's really just nothing going on with it. So the ideal is in your favor, right around here. Well, now your probability of success, now you're more in the randomness phase. People can still win with luck. And this is where the people that don't use level 2s, the blind traders, this is where they're hanging out, down here. You can never say that they can't have any success, but when they don't have that many things hanging out in their favor, they're down in this area, and this area long term isn't going to last very long. But if you can stay up in this zone of things, are you always going to be right? No, but you're keeping the probabilities in your favor, and that's what level 2s can help with. So but trading blind, you're trading with level 2s and blind, you're down here at this part of the graph. You really don't have many ideals in your favor, and some people still trade with just charts and no level 2s. So they're probably more around the midpoint around here. But when you add level 2s, it's just that nice extra layer of context. Here we talked about 3 layers of context, but from a trader's perspective of context, if you can have charts and then level 2s, and then get the psychological factors, now you're really putting yourself up here. Again, and I want to drive this home because I never want to come across as one of those people that say, take my course and I guarantee success. No, there's no such thing as a guarantee in the market, but probability, raise your probability, raise the odds. That's what level 2s will help you do, overall as a trader. So hopefully now you have the 3 things that we need to keep an eye on. We're going to build on top of that now. So we have size of the box, size of the shares, and then those reputations. And now we're going to just continue to build on top of that and move more into dilution and shorting now, which is just, especially in penny land, such a hot topic, so distorted. There's so much just wrong information out there, but we are going to get it all cleared up here in the next video.